Every time you lose a deal due to your company's interest rates, you're not just losing out on the commission on that one particular deal. You're losing out on the potential of tens of thousands, if not hundreds of thousands in additional commissions. Hey, I'm DJ Christofferson. I've been a licensed loan officer since the end of 2009. I've helped build a company to over multiple billions in volume, annual volume. I've been a top 0.5% producer in the country. And right now I focus on helping loan officers build mortgage careers that they love. All right, so let's talk about interest rates. Let's talk about that particular deal and why when you lose a deal due to your company's rates, it's not just one opportunity that you're losing. Right now, we're in an environment where we have higher interest rates. And so that means every time you get a new deal, which every deal is precious, but that one new deal you got now, statistically is gonna be 2, 3, maybe even 4 refinances down the road as the interest rates start coming down. You think about it, how much revenue, how much commission are you losing out on those future refinances? But you're not just losing out on those potential refinances. When you don't get a new client into your database, you lose out on the potential of their referrals. One of the best things about being in this business is the referrals that you get from your past clients. It's almost like free money in a way. Obviously, it's not free, you have to work for it, but when you don't close that deal, you don't get the opportunity for those referrals. So you're missing out on the additional deals from refinances, or if they purchase another property, you're missing out on their referrals. But also, if this is a purchase that you missed out on, there's almost certainly going to be a buyer's agent and a listing agent attached to that deal. And when you don't get that deal, you miss out on the opportunity to develop relationships with both the buyer's agent and the listing agent. And when you lose out on those opportunities, you can't even tell how many deals that you may have been able to get if you were able to secure that one particular purchase. But because of your company's interest rates, you lose out on that. So today I want to talk to you about what we do for interest rate and why our loan officers are always at a competitive advantage when it comes to interest rates. And there are 4 big reasons for that. 1 is choices, 2 is competition, 3 is corporate, and 4 is control. And let's talk about these one at a time. First one has to do with choices. We are the largest mortgage broker in the entire country, but we don't force our loan officers just to broker the loans. We also do a large percentage of our loans on the correspondent side. And if you're wondering what's the difference between the two, well, broker is where the lender we send the loan to, they fund the loan. Correspondent is when we fund the loan. So what's the big difference? Well, there are pros and cons on how you can price loans when you go to the broker way or when you go to the correspondent. One's not better than the other per se, but those differences allow you to do different things, which can be the difference of whether you get a deal done or you don't get a deal done. We don't force our loan officers and say, hey, you have to go correspondent, or hey, you got to go broker, or if you go this way, we're going to pay you less or whatnot. We don't do it that way. We give our loan officers choices. So you get to decide which path on that one particular deal is the right for you. And maybe the next time you do a different deal, it's the different path. You don't have to choose one path and stick with it. You always have the 2 choices. The next big thing has to do with competition. We are the largest mortgage broker, as I mentioned, but along with that, we have almost 300 different lenders we can send our loans to. And all of those lenders are competing for our business. And one of the main ways they compete for our business are by the interest rates they provide us, which in turn we are able to sell to our clients. And one of the great things about this, there are always different lenders who are trying to buy the market. That means you always know that you're going to have options for fantastic interest rates. So that does mean as maybe one week you go with this lender, next week you go with that lender, and the next week you go with that lender. The point is that you always have lenders that are trying to get your business by giving you lower interest rates, which in turn you can give to your clients. It's one of the best advantages that we have is by the competition that the lenders are duking it out with each other in order to capture our business. And the 4th big reason has to do with control. And I absolutely love this. Our loan officers have control on a per deal basis, the margin they are offering on their loans. Now, there are some compliance things that you have to follow, make sure everything's above board and legit, but it's incredibly powerful. You do not have to beg for a pricing exception. You're not going to some branch manager and say, can I get a margin exception? I need to get a lower interest rate, and then they make you feel like a loser that you can't sell or something like that. No, you know what's best for your business and you can control your margin. And what's really cool with that is that since we as a company take such little, we make such little on a per deal basis, even if you have to lower your margin, you're still making a large commission check. Many loan officers I talk to, even if we have to go a lower margin on the loan to get a lower interest rate, that compensation is still higher than what they were making at the previous company selling higher interest rates. And so if you want to see what our pricing looks like, we can hop on a Zoom and we'll run pricing side by side. I'll pull up my pricing engine, you pull up yours, we'll run a bunch of different scenarios and you can see for yourself where our interest rates stack up against yours. And of course, we'll also talk about compensation. So there's going to be a link around this video video somewhere. Click it, fill out some information, and my team's gonna reach out to you and set up a one-on-one Zoom with me so we can go over pricing.